gold prices plummet over 1% after Fed's steady rates decision. Brace yourself for a striking market twist. Gold prices have plunged by over 1%, sending shockwaves through the precious metals arena. This sharp decline comes on the heels of the Federal Reserve's decision to keep interest rates unchanged at a 4.25% to 4.5% range, while robust U.S. economic data casts doubt on gold's appeal as a safe haven. For those new to the market, this might seem perplexing as gold, often seen as a protective asset during uncertain times, succumbs to the forces of a strong dollar and decisive monetary policy. In a closely split decision, with a 9-2 vote, the Fed chose not to adjust rates, while leaving many investors in suspense about the timing of any potential cuts. Fed Chair Jerome Powell reinforced this cautious stance by emphasizing that no decision had been made regarding a rate cut for September, despite widespread market expectations. He mentioned that clear downside risks to the labor market were still on the horizon, hinting at growing economic challenges. But here's where it gets controversial. Independent metals trader Tai Wong pointed out that Powell's focus on curbing inflation, even at the expense of addressing employment issues, is intensifying the pressure on gold. This viewpoint is not without its detractors, as some argue that the underlying uncertainty, fueled by high U.S. debt levels and ongoing de-dollarization talks, could still underpin gold's long-term value. In essence, while a stronger dollar weighs down the metal, any significant pullback could indeed spark renewed buying interest. Adding additional layers to this narrative, the ADP National Employment Report revealed that U.S. private payrolls increased more than anticipated in July, even though early signs of labor market softening were evident. Commodities strategist Nitesh Shah from WisdomTree observed that the Trump administration's vocal criticism of current economic policies might actually propel gold prices higher by underscoring the risks inherent in the broader financial environment. Meanwhile, silver, another key precious metal, tumbled by 3.2% to settle at $36.97 per ounce, marking a near three-week low, while platinum saw a dramatic decline of 6.6% to $1,303.19, its lowest point since June 24th. Palladium also experienced a notable drop of 4.9% to $1,196.75. Senior analyst Jim Wyckoff from Kitco Metals attributed these drops partly to profit-taking by short-term futures traders, which not only pressured gold, but had a cascading effect on platinum and palladium as well. What do you think about this phenomenon? Is this a clear indicator of shifting market dynamics, or are we overlooking critical factors that might eventually restore gold's reputation as a secure asset? Dive into the discussion and share your perspective. Your take might shed light on a matter that is as complex as it is captivating.